Okay, let's get right into the stock market technical analysis. We'll go through the broad markets. And we've got Apple earnings coming out after the bell tomorrow. No, it's today. Sorry, guys. It's after the bell today. And I believe Amazon as well. So big cap tech earnings coming out after the bell. That's going to move the markets. So manage your risk, I think, is important. We'll go ahead and look at that. First thing I want to point out is interest rates. This is a key level. We're really close now to the cycle highs on the 10-year Treasury yield interest rates. So you'll see here, this level right here was our former resistance, is about 410. And you can see once we broke down, big breakdown candle, then it came back up, tested it, was rejected, tested it again, was rejected, and boom, breakout. All right, so right there. That's a breakout in interest rates. So we have a new range, and that new range is basically 410 should be support, and then the highs right here about 432. All right, the last time we were at that 432 interest rate on the 10-year Treasury was back in October 2022. And when I look at the SPY, and I go back to that, the SPY during October of 2022 was near the low. So big divergence between rates and the market. We're likely going to see a reversion to the mean. That's either the market coming down or interest rates coming down. So that's really what we have to look at. On the market, we have negative divergence. All right, here's the SPY. There's negative divergence right there. So the divergence is indicating that we are likely going to see the markets come down. Now, on the interest rates back here, this is a divergent high, but everything's pointed straight up, and it just a little higher, and we won't have that divergence. So there's no confirmation on that divergence. To see confirmation, you'd want to see the PPO start to turn down and the RSI turn down and put in lower peaks, all right, lower highs. We don't have that. So as of right now, interest rates are breaking out to the upside, which should put pressure on the market. Okay, so let's flip over to the triple Qs, because obviously this thing should move today after Apple earnings. So triple Qs, let's go to the hourly. On the hourly chart, you can see here's our former support zone right there. All right, we held that for a while, and we are trading below that. You can see breakdown, and we are getting rejected so far. It's proving to be resistance. So, I think that's likely going to continue to be resistance. Obviously, earnings can foil that. We might see a pop-up. There's a potential downtrend line right here on the hourly, maybe a pop-up and a back test. But ultimately, I think it's more probable that we get rejected here and head lower. All right, and going down to the daily chart, the bull market, or the bull trend, I guess we'll call it, the uptrend for the entire year is marked by this blue trend line right down here on the daily. And that would be an area I think we'll trade down to. So we'll see how we open or where the market wants to go after earnings. Maybe we'll gap down here, and it's probably going to be an area where you maybe want to cover for a bounce, all right? So I think we could trade down to support, bounce there, and then ultimately we'll look for a break of that trend line to give us a longer term sell signal. Apple. So here's Apple earnings. Couple of things. Obviously, anything can happen right after earnings. We might bounce up, maybe just gap down. But the bigger picture is really what we want to trade off of, and that's this big bearish rising wedge, all right, with negative divergence on the momentum indicators. We've started to drift lower and break down. You can see we kind of breaking and backtesting. We're just kind of floating, but there's some profit taking going on right ahead of earnings. So if they gap it up, maybe you put in a new high, and that would be a divergent high that would very likely be sold into, all right? Or you can gap down. I think the end result, it's most likely the end result is that we end lower in the next, couple days, all right? Maybe not necessarily right after earnings, because the market seems to tend, from what I've noticed, to just bid up Apple. They always know how to beat expectations, so it's not necessarily whether they beat the expectations, it's what's the market do with that. Do the big institutions say, all right, that's the top, I'm going to go ahead and take my profit? and that's what we'll be looking for. Okay, wheat. So wheat is right now below my trend line. All right, not impulsively below. So we'll see how that ends up. Much lower, and we're going to probably come down and start to back test this wedge again, this big bullish falling wedge. So I think it'll hold here, but I'm not 100% confident. So if you want to stop out, everything's up to you guys. We need to manage our risk, of course. So, but ultimately, it's still been a very profitable trade, even though, so far it hasn't held up. You can see it broke out here. If you remember right, we were buying it all through here, kind of through here. And then it rallied, all right, took profit, okay, bought it back right down here. It rallied again. Now, if you took profit there, great, you're doing great. But, now it's back down here. So I think we're at support, but again, we need to see it really hold right here. And when I look at the wheat futures, you've got this trend line. It's not, it's not the best trend line. It could have been marked maybe like that. We just didn't have that many reaction points to really say that it's a valid trend line. The big picture, though, is you've got this low right here. All right, you've got that low there. We're pretty much there. And then if I go down to the hourly, you can see we're just kind of drifting lower like that. And we are starting to set up some bullish divergence there on the hourly. So could indicate that, on this hourly chart, we're going to get a reversal and, a bounce. And that would probably be positive for the daily. Again, it's not too much lower for another backtest of that wedge. It's right down there. Would be pretty decent support. Right about, it's about $6, but it's about $5.92 here on this futures chart. And that's a drop. That's a continued move down of about another 3 to 4% down. So yeah, that's very possible at this point. Okay, MasterCard. So on MasterCard, I talked about this yesterday, but ultimately you have an uptrend line there. We broke trend, back tested for quite a while, a couple months really, and then we've been rejected. And we also had kind of a former high, kind of, it creates this trend line right here. We have a reaction high, and it did hold right in there. We're below that now. So to me, it looks like this little move right up in here was the false breakout, and we are going to start to head lower. This chart is also accompanied by big negative divergence, telling me that that's the very likely outcome. No guarantees, of course, so we have to manage our risk, but the likely outcome is that we're going to trade lower. And I think if MasterCard does start to actually trend lower, this is really a pretty solid target for me, which is right down here, about 341.08. That would be a drop from where we're at now of about another 13% or so. So we'll keep an eye on that. And then obviously Visa, Visa's still holding bullish trend. So if this one breaks down, it's definitely going to help the case for MasterCard to break. Okay, gold. So gold is, here's the thing about gold. These are the gold miners. I've got an uptrend line right here to watch, all right, and several reactions. We are below that trend right now, right there and now. It is a divergent low. It's not confirmed. So you'll see the divergence, how the momentum is moving higher. We are trading lower now, but we don't have confirmation. So I could see maybe a little bit more, then it turns up. Ultimately, it's a tough, it's not a strong case to be a buy. What I'd prefer is for a recovery back above this trend line, back above the 200-day. That would be an indication of a buy, and that would tell me that this is a false breakdown. With rates rising, you really need to see rates reverse. With rates rising, gold's likely going to continue to sell off because it's all a play on the dollar. As rates rise, the dollar is able to capture higher interest rates. You take your money, you put it into a high-yield savings account, or you're buying treasury bills, or whatever you're doing with your dollars, you're getting a higher rate of return on those dollars. And that's competition for gold. So there's opportunity cost, essentially. And so as rates rise, it's bearish for gold. So we'll continue to watch this. I can't make a strong case right now on some of these miners to add to any positions. I don't think, if you own this GDX, I don't think it's a sell. I don't really see a sell signal, but I don't necessarily see any clear signs to buy. So kind of mixed on that one. I need to wait for more information. Triple M is at support right now. You can see here 3M. You've got support right there. It's about 107.50. There's a reaction. It was resistance. Gapped above there, rallied, and pull back to support. So that's at support. You buy at support. Looking at the hourly, slight negative divergence that kind of showed up, especially on the RSI. It was here. The PPO didn't, just barely. But it's a pullback to support. There's also this gap. So I think you probably come down, maybe fill this gap, and then bounce back and start to rally. Bigger resistance on Triple M, though, is right here. So you'll see here on the daily, you've got resistance, resistance, resistance. So we didn't hit that. So I think you probably bounce up to here and hit that resistance level, hit that downtrend line. And then from there, who knows, you break out, that would be a buy signal, provided that there's no negative divergence, but otherwise that's probably going to hold as resistance, and this thing will likely continue in a downtrend. So keep an eye on that. It's really all I have for right now, guys. Obviously, big tech earnings are going to kind of move the market, and then there's a job report tomorrow. So keep an eye on that. We'll come back and see how it goes. And we'll evaluate at that time. Not going to do a video tomorrow. I'm going to be away from my desk. I will be able to make posts to the private member group, though. So